Hello everyone, and welcome to FinWiser Advisory. In this course, we will be talking about financial modeling, DCF and comparable valuation. This course is divided into 16 modules. In Module 9, we will cover interest income and expenses. In this module, we will understand what is interest income and expense, extracting the historical data from annual reports, creating placeholders for forecast period, calculating values in the forecast period. We will be using Microsoft Excel. In this template, there are two sheets named as Control Accounts 1 and Control Accounts 2, which, step by step, runs the user on how to calculate interest income and expenses. Historical income statement, balance sheet and cash flow created in the previous modules are available in this as well. Once the user completes a module, the final outcome of that is available to be used in the next module. Now, let's get started. For a corporate company, interest income is the revenue generated from the company's interest-bearing assets. These assets can include cash held in interest-bearing accounts, investments in bonds or other debt instruments, and loans made to other entities. In this model, interest-bearing assets are 1. Cash and cash equivalents, row 8 of balance sheet. 2. Short-term marketable securities, row 9 of balance sheet. Interest expense for a corporate company is the cost incurred on borrowed funds. It represents the interest payable on any borrowings such as loans, bonds, lines of credit, and other debt instruments. In this model, interest-bearing liabilities are 1. Convertible debt, row 27 and 33 of balance sheet. 2. Long-term debt, row 28 and 35 of balance sheet. Interest income and interest expense are two distinct components of a company's income statement that reflect the company's earnings from interest-bearing assets and its costs of borrowing, respectively. They can be calculated by 1. Determine the interest-bearing assets, like cash, marketable securities, or other investments, on the company's balance sheet, row 8 and 9, and link them in line D77 to K77. 2. Historical interest income can be sourced from income statement, row 24, and linked in cell range D76 to F76 as shown here. 3. Calculate historical effective interest rate for 2011 to 2013 by dividing the interest income by interest-bearing asset for that year. Project future interest rates in cell range G79 to K79 that the company might earn on these assets. 4. Calculate forecast period interest income by multiply the projected balance of interest-bearing assets by the estimated interest rates for each forecast period. For instance, in 2014, cell G76, interest income is calculated using this formula. Similar to the steps followed for the calculation of interest income, interest expense in the historical period, cell D82 to F82, is sourced from income statement, row 25, and during the forecast period, cell G82 to K82, is calculated on the current year average interest-bearing liabilities. Once the interest income and expense calculation for the forecast period is completed, link the same to the income statement cell range G24 to K24 and G25 to K25 respectively. That's all for now. See you in the next module. Have a wonderful day.